Hey guys, how's it going? Venture Investing here today. So today we're going to be talking about Apple. We're going to do a relatively quick video on their Q3 2023 earnings. Now this wasn't a particularly important quarter for Apple, wasn't the best quarter, so how bad is it? Let's see. In this video we're going to go through their financials really quickly. We're going to go through a little bit of the things I gleaned from the conference call, and then we're going to quickly go through their financials. The big top line here, which was good, revenue was $81.8 billion versus an estimate of 81.55. So total revenue, we actually had a beat. EPS was a beat as well, but of course they're buying back so much of their stock that usually that's the case. It was $1.26 versus $1.19 rather, not billion. Expected. Cash were about $166.54 billion. I believe we're around $50 billion-ish net cash neutral. So that's their objective over time. This is the one where we saw a bit of a disappointment. iPhone revenue was 39.67, well the estimate was 39.8. Not a huge miss, but these are big numbers. So of course that was a concern as well. iPad revenue got hit pretty hard as well. I think this was down 20% year over year due to difficult compare. 5.79 billion versus an estimate of 6.41 billion dollars on the iPad. Mac was a beat. We see all that wasn't doing the best in the past, but now it seems to be doing pretty good. Of course, we have everything now in the Mac silicon. So 6.84 billion was what the revenue that they generated versus an estimate of 6.37 billion. So pretty good little beat there. And of course, services. If you're watching my videos before, this is the fastest growing segment of Apple and actually the highest profitability. I believe their margins are around 70% this quarter. They had $21.21 billion this quarter. The estimate was $20.76 billion. And wearables, home, and accessories was a slight miss at $8.28 billion versus $8.39 billion. So a bit of a mixed bag. The big one that everybody always looks at, and I say we're kind of overlooking this. We have an all-time record install base. Was the one that kind of fell back a bit there, and the one that I think is one of the most important, is the best. But again, a bit of a mixed bag. Of course, in the conference call, they had a little talk about the Vision Pro. That could be really good for the company, but we're not going to see that till early next year, and that's a very high-end premium device. Of course, like they always say, it seems like every quarter they say the install base is at an all-time high, which is going to drive services going forward. And something that hurt the company more than anything was they had nearly a 4% foreign exchange headwind. And they sit on a constant currency basis. They grew in aggregate. In fact, a lot of these segments were records, but it's that foreign exchange that's killing them again, and they expect it going forward as well. Because when you go into the guidance here, they're saying the foreign exchange headwinds are going to continue to be a headwind. And there's going to be a year-over-year decline in revenue in the September quarter. So not the greatest thing there. That's probably why the stock, if you take a look at it right now, I forgot to show you guys before, is down after hours, a little as of recording this, getting close to 3%. But also in their guidance, they have iPhone and services going to accelerate. Again, these are probably the two most important ones, so that's good. So maybe that's something that's causing the stock not to go down too much on this not greatest quarter. But Mac and iPad are going to be declining double digits. And of course, this is due to a difficult compare. If you remember specifically, I think it was even the iPad. They had a lot of pent-up demand because of shutdowns and things like that. So it was a very difficult compare quarter. It was a phenomenal quarter. So that's those basically the main things that I got from the conference call. There wasn't too much. Let's take a look at their financial statements right now. So taking a look at the balance sheet here, net sales, so products, we're looking at year over year, of course, here was down significantly, 60.5 billion versus 63.3 billion year ago. Services where we saw that jump, 21.2 billion versus 19.6 billion. So you can see the increase there. So that brings us to total net sales of 81.79 billion versus 82.95 billion. So that's where we saw a slight drop in terms of the revenue, but where we got some of that back was the cost of sales. We actually saw that the cost of the products, cost savings were down quite a bit, only $39.13 billion in cost versus $41.48 billion in cost. Services was up a bit, but I mean, they're really pushing services. So when you look at their gross margin, it was 36.4 billion versus 35.88 billion a year ago. In terms of their operating expenses, again, R&D, especially if you see this kind of stuff they're doing, was up from a year ago, 7.4 billion versus 6.79 billion a year ago. SG&A was actually slightly down, a little bit of cost savings there, so the total operating expenses were more at 13.4 billion versus 12.8 billion. Going down to the bottom line here, net income was 19.881 billion versus 19.442 billion. So you can see as a total, actually they brought in more money, even all these numbers that were dropping, probably because of the increase in services that have higher margins and stuff like that. So actually financially, it was a pretty good quarter for the company. That gives us the diluted earnings per share of $1.26 versus $1.20 a year ago. Now, if we look at the net sales by reportable segment, a little bit of a mixed bag here again as well. Specifically, Tim Apple was saying the Americas were specifically difficult in terms of the phone market right now. Dropped a little bit in the Americas in terms of sales, 35.3 billion versus 37.4 billion a year ago. Europe was up slightly, over 20 billion versus 19.2. Actually pretty up quite a bit. They did good in Europe. Greater China was up as well, another segment that everybody was worried about for quite some time. 15.75 billion versus 14.6 billion. Japan took quite a hit, 4.8 billion versus 5.4 billion a year ago. And the rest of the Asia Pacific took a big hit as well. And that gives us the total net sales, of course, as we spoke before, about 81.79 versus 82.95. Now the net sales by category, the iPhone, like we said, dropped a bit, not too much, 39.66 versus 40.66 billion a year ago. Mac dropped quite a bit, 6.8 billion versus 7.3 billion. iPad was one that just got hammered. That's that 20% drop there, 5.7 billion versus 7.2 billion. And wearables, homes, and accessories year over year actually did well, 8.2 billion versus 8.08, so grew there. And of course, services, like we said before, grew significantly, 21.2 versus 19.6. And again, that gives us the total net sales that I quoted above. I'm not gonna go through the balance sheet because there's nothing too interesting there, but taking a look at a couple things here on the statement of cash flows. Purchases of marketable securities, way less than a year ago. Again, like I've said before many times, I almost use this as like a proxy of the market as a whole. Again, probably a flawed way of looking at it, but only 20 billion versus 70 billion a year ago. Proceeds from maturities of marketable securities was slightly up a bit. And proceeds from sales, they actually sold very little, 3.9 billion versus 33. So that might show a little bit of their conservative nature right now in terms of what they're doing with the cash in their investing activities. And of course, in financing, they repurchased common stock 56.54 billion versus 64.97 billion. So not quite as much as a year ago. So as promised, pretty quick video, not a super significant quarter, but not entirely as bad as some people are making it out to be. It'll be interesting to see what's going to happen. Maybe the market as a whole, maybe the economy is finally starting to weigh on Apple a little bit. We'll just have to see, but you also got to keep in mind, look how much Apple has run in the last year. It's been crazy, right? So do for a breather. Would love to know what you guys think though. As usual, leave a comment down below. Don't forget to like. Really helps the channel out, guys. And that's gonna be it for today. And I'll see you in the next one.